Welcome to the podcast about investing in startups, where existing investors can learn how to get the best deal possible, and those that have never before invested in startups can learn the keys to success from the venture experts. Your host is Nick Moran, and this is The Full Ratchet.
Welcome to another release of Investor Stories. On this installment, the experts talk about their investment philosophy, how they evaluate early-stage startups, and how that may be unique from other venture investors. Here is the segment called Venture Investor Strategy. On today's special segment, we have Bryce Roberts of O'Reilly Alpha Tech Ventures and nbsp. Bryce, can you tell us the story of how you arrived at your current investment thesis?
Yeah, we arrived at our investment thesis partly over 3 years of trend spotting through O'Reilly Media and watching how technologies work, and over 10 years of seed investing and watching how venture capital investors and VC expectations influence entrepreneurs. And so our investment theme has really been shaped by the idea that there are entrepreneurs, sectors, and companies for whom venture genuinely isn't a fit, or it certainly isn't a fit in its earliest stages, and that we can be partners with to help them navigate those waters and preserve their options and optionality for as long as possible. So again, it's really been an evolution of, we see NDVC as another trend that we've spotted in the same way that Tim spotted Web 2.0 and the maker movement, and we spotted seed investing. We think, with NDVC, we're at least on the scent of and in a position to be able to shape what could be a very impactful long-term trend for investors.
On today's special segment, we have Mike Collett of Promise Ventures. Mike, can you talk about your thesis and or how you evaluate early-stage startups for investment, and maybe mention any aspects of your approach that are unique from other investors?
Yeah. So, Promise, we have 50 people. We're based in Chicago. We have a variety of direct asset teams in different verticals, cross duration, other efficient frontier, sitting in Chicago. So we come out of the gate a little uncorrelated, smelling different than some of the other coastal VCs. And, we are boring, unsexy. We're not boring. We like investing in boring, unsexy, long sales cycles, hard business models, right? Massive industries. But that can look boring, and we love that, right? So most of it's enterprise, and listen, and you got to be ready for pain. I mean, this stuff takes a long, long time, but we hopefully have a long view. So we like hardware and fintech, blockchain stuff, ag tech, health tech, space, drones, VR, AR area, AI, computer vision stuff. We've got a lot of CV. We like this idea of building blocks companies with dev teams, really making efficient with startups, being efficient around all the different stack that they employ. We're a little contrarian on the retail, on the omnichannel side, like hard retail. We don't really dabble in e-commerce. So we try to do things because we're passionate about it, but that's different. We don't do a lot of consumer models. We focus very much on the very hard stuff, and we like to say we like big moats, and we cannot lie. So those those teams that can build those things are great.
On today's special segment, we have Nikki Vac of Blackbird Ventures. Nikki, can you tell us the story about how you arrived at your investment thesis and how the thesis has evolved to what it is today?
Yeah, so I didn't say that the first startup I founded was actually with Mike Cannon-Brooks, who was a founder of Atlassian. And so Mike has only founded 2 startups, and of the 2 startups, he definitely wanted to found Atlassian, not the one that we started together. But I'd always been very close to the journey of Atlassian and how Mike and Scott had built the company very deliberately around pricing transparency and this very innovative sales model where Atlassian is a public company with, on track for say 600 or 700 mil of revenue, and still doesn't have a commissioned salesperson on the team, and that insight into the distribution of enterprise software and how that was being completely changed with the internet and the open source world and all of these other factors that led to the company coming up with a very innovative sales model. I think I'd always had a deep appreciation for that. And so Atlassian had inspired a number of other SaaS companies in Australia, and even in the initial stages, that sort of belief that not only could you build a company that sold to small and medium businesses in kind of an online, low friction way, you could build a great company selling to large businesses in a completely online and low friction way. So that initial investment hypothesis sort of led to the creation of Blackbird, and then all of the kinds of new marketplaces that were solving problems where both sides of the market could be all around the world was certainly another hypothesis. And then I think over time we've become more and more fascinated with robotics and things like autonomous vehicles and things like robots leading to the complete automation of physical processes. That has been another sort of additional leg to the stool that we've added over time.
That will conclude this installment of Investor Stories. If you're enjoying the program and would like to see it continue, take a moment and leave a 5-star review in iTunes. Also, if you'd like updates on new content from TFR, as well as the top 10 VC articles every week, go to fullratchet.net and sign up for the newsletter. Okay, that will wrap things up for today. Until next time, over-prepare, choose carefully, and invest confidently. Thanks for joining me.